We have our silver expert, David Morgan of the Morgan Report. David, how you doing?
Doing great, Alan. Thank you.
How was where'd you give your speech last week? It was a speech. Did you do another speech last Monday?
No, I did not. I was actually taking a mini vacation out to Sedona, Arizona, and was listening to someone talking about all the changes that are taking place, not only in the economy, but weather-wise, politically, food, all the stuff that's kind of converging into what Jim Paplava coined the perfect storm. So it was a very interesting lecture, and so I got to listen for a change.
I like Sedona. I was out there in December and January of 2000.
Yeah, I was very impressed with the rocks in the area and all that. The town was a little too corporate for me. I expected to be more of a smaller place, kind of walking everywhere kind of a deal. And of course, it was highly paved, very uniform. You know, they've got a covenant out there that everyone has to adhere to a certain building code and all that. It's very nice looking, but I was a little surprised on the setup of the town itself.
Now, how did you get there by plane or by car?
Both. Flew to Phoenix and then drove from Phoenix to Sedona.
When I went to Sedona, we actually landed on that airstrip they have up on top of that mountain, and it reminds me, you see it occasionally, they just took the top of one of those mountains and just sliced the top off and put a runway on there.
Precisely. Yeah, we actually drove up there and walked around. There's a couple hiking trails there, and we did that one of the days we were there, and I know exactly what you mean.
David, we're watching gold and silver both pop this morning, but $19.59 at the moment for silver in an environment where silver should be above 30. What do you attribute this continuing relative weakness, even though we did have a key reversal and we're well above the spot where we saw that key reversal? Silver should be, and gold should both be off to the races, and yet it's not.
Well, I'm not a big fan of, using the word manipulation or management, every time that this comes up, because to me it looks, like you're using it as an excuse. But the derivatives markets are the biggest problem with the financial system. I mean, there's lots of problems. If you could put it on one thing, it's probably fractional reserve banking. But having said that, the subset of that is all these derivative products, and it's not just in the precious metals where there's all these derivatives that are not only the transparent ones, which are like your futures and your futures on options that are in the COMEX or the LME or the LBMA, but they're non-transparent, these over-the-counter derivatives that are set up by different entities like CPM Group and several others that there's different bullion banks and different mining companies do private deals. So there's all kinds of derivatives. And derivatives, are the tail wagging the dog. Now, I just want to interject here before I go on to precious metals a little further, is that the biggest derivatives problem is the bond market. This is one of the ways that the interest rates continue to stay so low, is that these big banks are writing these derivatives products and selling them to pension funds and different municipalities like Orange County, if you remember that many years ago. And a lot of them are in these interest rate swaps, thinking that, interest rates can't go any lower, and they make these deals. So if you want to lock in a good 3%, the county manager says 3% sounds awfully good, you'll lock that in. But the subset of the derivatives, if it goes lower, then they owe the difference, and it's a real mess. And these banks are just preyed upon a lot of entities. Anyway, back on the precious metals. So that's the reason is these derivative products are able to substitute these paper products and settle in cash many times over what the physical precious metals really their existence is. But as I've said many times, and people probably are tired of hearing it, that a piece of paper doesn't equal a piece of metal. And the day of reckoning is ahead of us, and of course no one knows exactly when, but China just smiles. They love these low prices, and they just keep shoveling massive amounts of gold, physical gold, in their direction. India as well. So we're seeing a point coming up, again, no one knows when, where one of these derivatives, one more, is going to blow up. and then that day of reckoning is upon us. And we've already seen it, too. That's the thing that is rather infuriating with this Germany not getting their gold and some of these other entities making noises that they want to repatriate their gold. So it looks to me as if the gold market's going to be where it is. But that's the problem. It's that there's just too much paper out there, and not only, the amount of fiat that's out there, but it's all these paper derivatives that are out there in the bond market and all the commodities and gold and silver market. You name it, there isn't a financial product out there. And look at the ETFs. A lot of the ETFs are nothing more than a bunch of paper on top of paper. So it's upsetting, and it's going to come to a head, and it's going to be rather more than interesting when it starts to unravel.
Did you see the size of Deutsche Bank's derivatives holding? $75 trillion?
Well, that's the problem. I mean, people talk about the notional value, being in these multiple trillions, and it's true, and I think it's very important to pay attention to it. And, a lot of derivatives products are at a leverage ratio of 100 to 1. So $1 does the work of 100 because that's the way derivatives are. I mean, I don't know how sophisticated our listeners are, but like an option, for example, an option on a futures. I mean, that's just highly leveraged. So $1 can control $100 worth of silver, for example, or higher. I mean, these over-the-counter derivatives, maybe a dollar can control $1,000 or $10,000. So when you're talking about the notional value, you're talking about the $10,000 in the derivative that's controlled by $1. So you could divide it by 100 or maybe even more than that to get an idea of how much money that represents. The problem with leverage, if anyone that's ever traded futures and lost a single trade or more realizes it works against you. And that's the problem with the system. All these derivatives are out there, and a small change can make a huge difference in what someone is owed or someone wins or loses. And this is unbelievable that we've gotten ourselves into this position. I mean, totally. And there could be a point, in fact, I think there would be a point, where the Federal Reserve can't backstop it anymore. If the 2008 crisis reasserts itself, and it looks like it easily could happen because it's only gotten worse. It hasn't really gotten better. The banks haven't really done anything other than consolidate their power.
David, we're coming up on the hourly break. This is Alan Butler and David Morgan. David and I will be back on the other side of the hour. David, when we left the break, we were talking about the derivatives market and the just astounding side of just Deutsche Bank, just one bank, at $75 trillion. I mean, Germany's total economic output is, what, 1/10 that? And you think a lot of the derivatives were really at the root of the financial crisis that we saw, and rather than curtailing the amount of derivatives, it's actually gotten worse. So you wonder what the central banks have really been up to.
Absolutely. I mean, they basically are really not solvent. Part of this, the TARP was to try to help them become solvent, and then we've got QE1, QE2, and QE3, and this situation with the Fed buying, $85 billion worth of toxic assets, really, that they're tapering. That's all designed to sell paper that nobody wants, that has really no value, and swap that for U.S. government debt, either short-term, medium-term, or long-term. And that's what it is. The reason, like AIG failed and some of these other investment banks, was that the paper was no good. Most of the paper was based on derivatives. Now, the paper might have been quote-unquote good, except it couldn't be paid off. In other words, I win, you lose. Well, I lose, but I can't pay you because now I'm bankrupt. So that was what took place. And the next time, and I think there will be a next time, the Fed might not be able to get in and, come to the rescue. And then who's rescuing? I mean, what is the Fed? What's this all about? I mean, basically, it puts the bad bets on the backs of the population. It's not like the government has this pocketbook of money and they just say, well, here, we'll pay it. And, it's like your uncle coming to rescue you. Can't make your credit card payment. Your uncle comes in and says, here, I'll write a check and you'll be okay. That's not what happens. What happens is they come in and they write a check and say it's going to be okay, except you are on the hook for it. Well, guess what? That can't be paid either. So it's really a mess, and very few people seem to really understand exactly how the system works and who's liable for what. I think the government actually produces something. The government produces the debt that's owed by the people. So when these banks get bailed out, it's you, the populace, that are bailing them out for their mistakes. And now you're letting them do it again. And, of course, now with the new law, there are no bailouts allowed. No bailouts allowed. So what does that mean? It means absolutely bail-ins will take place next time. So not only are the taxpayers liable for the debt that was incurred, if it happens again, and I'm almost certain it will, bailouts can't be used. So they'll take anyone that's got any kind of liquidity in their bank, and they'll bail it in. So, I mean, this is a situation that we've never seen before in the history of finance. It's a global problem. It's not just a given country. I mean, you could argue the Roman Empire was as bad. They did it in a different way. They debased the currency, but they feel they have as currencies. They didn't have derivatives and that type of thing that we have in the modern financial system.
You know, the whole bail-in thing, I still don't think got the attention it deserved. Our media, they covered Cyprus, but nobody picked up on the fact that as part of Dodd-Frank, when those politicians stood up and said no more taxpayer-funded bailouts, we know their banks are going to have to get bailed out again. They've been getting bailed out forever. No one bothered to say, well, how they're going to get bailed out, and they're going to get bailed out with the bail-ins. And Cyprus was their test case.
That's right. That's where I see it, and I really believe it. And that's going to really upset the population. I mean, who knows what will happen once that takes place. You know, I could tell you yes, but I believe it's going to be when. So people aren't ready. I mean, they still are, humming along, singing the song, Listen by the Graveyard, thinking that, it's got to get better, it's going to get better. It can't be as bad as, David Morgan and Alan Butler say it is. They're doom and gloomers, Well, no, we're realists. The real facts are the real facts. This Dodd-Frank bill says you cannot bail out a bank anymore. So what does that mean? It means you're going to bail in. And the law's on the books. That could be easily looked up. And don't believe me, do your own research. You'll find out pretty quick. So it's really a mess, and it's probably, my view, definitely going to get worse before it gets better. So,
David, let's talk about the Morgan report briefly.
Okay, well, first thing to do is come to the website, silver-investor.com. If you hit the subscribe button, you'll get information on the different level of services. We have the Basic Plus, and the Mastermind series. They are set up for different investor. Basics is for people that just are buy and hold mentality, and the Basic Plus is people that really want to get involved, especially in the mining side, where we usually shoot a film of the mining projects that we're interested in on the lower level, but we do speculations, mid-tier and top-tier companies. And the first thing to do is how to use the Morgan report. We outline exactly the purpose of the report is to help you make as much money as safely as possible. And we outline different scenarios there, like according to your risk profile, if you're aggressive, if you're conservative, and anything in between. So a lot of thought, a lot of effort. We're continuing to make it better. We have a good, strong subscriber base that really has stuck with us, and I'm very grateful for that.
David, what got you interested in the precious metals market?
Well, as I talked about before, I was 11 years old when the coinage changed, and I noted that, and I thought, this can't be true. I mean, how can a piece of copper with some other silver-looking metal on top of it be equal to a 90% silver coin? So that put the question in my mind, but it wasn't like an obsessive thing. I thought about it, but not a lot. And then after we started studying the Constitution, I saw that no state could pay any debt except for gold and silver. And I knew that wasn't true, so I started to question that in class, and I got some mumbo-jumbo answers. So I started going into, constitutional study, and I really got fascinated with what money is. And so it's kind of a self-taught situation. And then, of course, once you're on that path, you go to a library and start checking out books. I found None Dare Call Conspiracy by Gary Allen. And boy, if you read that book when you're a youngster, that'll really mess you up because, I learned about fractional reserve banking, the Federal Reserve is a private corporation. I mean, all the things that people now take for granted, but I knew that stuff, before I was 18. And I tell people that, Federal Reserve is a private corporation. They just laugh because everyone knew it was part of the federal government, So it's been a long journey for me. I was, a voice in the wilderness for a while. Now, of course, with the internet and the communication systems that we have, a lot of people are very savvy on this kind of thing. But boy, I would tell people stuff that's now taken for granted, and they thought it was an absolute loon.
My heart's hats off to you. I did not know the Fed was privately owned, that it was a banking cartel until I was in my 50s.
Yeah. I have a lot of friends that are in their 50s that have come on board and, said, whatever. I mean, we're all waking up. I want everyone to wake up. I want everyone to know the truth and then make their own decisions. I mean, there's people that know full on, fairly have a pretty good grasp of how the system works. And they're saying, well, it's okay with me, and that's fine. I just want everyone to at least have full knowledge before they make a decision, but to sit there and be blind, and I think deliberately so. I think the mainstream media does a great job of propaganda to make people, I mean, it's just the Orwell thing as far as I'm concerned. I mean, you look at 1984, war is, freedom is slavery, war is peace, and I forget the third one, but the Ministry of Truth is out there telling people in the Matrix that, war is peace, freedom is slavery, and everything is just fine. Don't pay attention to reality. Watch this thing on the screen. See, it's good.
We've been speaking with David Morgan. If you want to get to David, you just go to the Morgan Report. David, it's a pleasure.
Well, thank you, Alan. Always a pleasure to be with you.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.